Hi, everyone, and thank you for joining us tonight at CDSPI's webinar for graduating students. First of all, congratulations on your accomplishment getting here. And thank you for taking the time to join us tonight. We know you all have a lot going on right now, but you're here, which means that you understand the importance of your financial wellness. And for you to achieve that means getting the information that you need to make informed decisions. My name is Julie Berthium, and I'm a senior insurance advisor with CDSPI. Joining me tonight is my colleague, Matthew Wright, who's an investment planning advisor. Tonight, we're going to walk you through some of the steps to help you get your finances in order and get you ready for the next chapter in your career, or at least learn where to go to get the answers you need. So let's get started. So for the next 30 to 45 minutes, we're going to help answer some of the four most asked financial questions from graduating dental students. So first of all, how does malpractice insurance work? What happens to my CDSPI student insurance? Should you incorporate and when? And what is the magic trick to paying off student debt and saving at the same time? Now, feel free to add any questions to the chat, and we can certainly address them in the Q&A at the end. And also remember that everybody's situation is different and requires individual, personalized advice. And we do encourage you to schedule some time to speak with one of us so that we can help you get started and provide some general direction on the right path. So why CDSPI? I'm sure by now most of you do have at least a vague idea as to who we are, but this slide is just to highlight some of the things that makes CDSPI different from other financial institutions. So first of all, and most importantly, dentists, your staff, and your families are our only clients. So we understand you best and we design our products with you in mind. Secondly, we are a not-for-profit organization, and this guides everything that we do in all of our operations, allowing us to give back to the dental community. And thirdly, all the advisors at CDSPI, including Matt and myself, we all work on salary rather than commission, allowing us to be unbiased and objective in the advice that we give to you. This is why over 20,000 dentists trust CDSPI to help grow and protect their wealth. So much so that CDSPI manages $1.37 billion of dentists' money on the investment side of our services. And more recently, Morningstar Direct did rank CDSPI funds as #1 for performance. So we're very proud of that. Also, we do offer our MAP program, or our Members Assistance Program. This is a complimentary counseling and wellness service provided to you because we know that your financial wellness is very much tied to your emotional and physical wellness as well. So let's dive right in. How does malpractice insurance work? This is probably the question most top of mind for most of you right now as you transition into practice. Now, when you become licensed as a dentist, you will be legally responsible for the services that you and your staff perform. You could be accused of malpractice and have to bear the significant financial consequences of that. And even if you're innocent, you will still want to defend yourself, which can add up to significant legal costs. Malpractice insurance will protect you and your corporation in an event a patient sues you, as well as paying for legal representation, because no matter how careful we are, we're all human and sometimes accidents do happen. This is unfortunately a looming reality for every dentist. So how do you get malpractice? Well, malpractice insurance and your license do go hand in hand. You cannot have one without the other. So you do apply for both at the same time. When we get your application, we will contact the licensing body to let them know we have it and to ask what date they anticipate activating your license so that we can activate the insurance as of the same date they activate the license. Now, one thing to keep in mind is that if you are not going to be practicing right away after graduation, maybe you're taking a few weeks or months off to, travel and enjoy life a little bit, then perhaps you may want to postpone getting your license, because Malpractice is linked with your license and not with whether you are working or not. So if you activate your license right away, but do not plan on working right away, you still do need to pay for that malpractice insurance. Now, outside of Alberta, Ontario, and Quebec, CDSPI is the primary provider for malpractice for Canadian dentists, providing coverage ranging from 3 to 25 million. If you'll be working in Alberta or Ontario, your primary malpractice will be along with your license for 2 million. However, we do offer Alberta and Ontario dentists an option to purchase excess malpractice if you do wish to have more than just the basic $2 million. So here is a sampling of some of the large malpractice claims and settlements that CDSPI has come across over the years. Now, I'm not going to read through all of these, but I'll just leave it here for a second to have a moment to review it. Okay, and these are the types of procedures that dentists most frequently submit claims for. Again, just have a moment to look at the numbers. And here are the most common types of complaints. Okay, so the big question I get often, other than how do you apply for malpractice, is how much coverage do you need? And that depends. There's no one fit all answer for everybody. As I said earlier, we do offer coverage ranging from 3 to 25 million. And the 3 million is sufficient for licensing requirements other than PEI, which requires 5 million. But you may still want to have more than just the minimum, even though that's going to satisfy your licensing. And there are certain factors that you should take into consideration when picking an amount. For example, are you in a specialty? Do you do a lot of surgery? IV sedation? Do you work with a lot of children? What are your patient demographics? These are all scenarios that can increase the degree of risk that you face, and therefore you may want to have a higher amount of coverage. But even if these scenarios don't apply to you, all it takes is one bad claim to financially ruin you if you don't have enough coverage. So what is your peace of mind worth? I do have lots of GPs that still have the maximum 25 million because that's what helps them sleep at night. And whatever amount you choose, you're not locked into that forever. You can change it up and down whenever you want. And how much does it cost? Well, the CDSPI malpractice insurance, because we are a not-for-profit organization, whenever we do generate excess revenue, we do give it back to the dental community. One example of this is our malpractice premiums have been reduced 8 times in the last 16 years. Now, although in 2022, we did see an increase in premium, this was a reflection of hard market conditions. But in 2023, we were able to reduce the premium, and again in 2024. And as you can see on the screen here, dentists in 2024 are actually paying less than they were in 2007. I mean, how many insurance companies can say that they want to reduce your premiums? So just one way that we do give back to the dental community. So what happens if a claim is made against you? Well, if you treat a patient, whether they are your regular patient and you see them every few months for years on end, or you see them only once because they are the patient of another dentist of the practice who's on vacation, the moment they sit in your chair, they are your patient, and you do share in the risk of any possible malpractice claim. But here at CDSPI, we are your ally, and we're here to help you get through the process when issues arise. So the moment you suspect that there could be a claim, you don't need to have been sued yet, but maybe something went wrong or you just have a bad feeling about the patient, contact us immediately. Never try to negotiate with the patient or offer reimbursement, as that could make defending you more difficult if you have done so. We'll take care of everything. Once you contact us, an adjuster will be assigned to you, and all approved legal fees, expert witnesses, settlements, if there is one, they are all covered by the malpractice insurance. Now, the adjuster, once they contact you, they're going to be letting you know what information they need from you. They may be needing to speak with the lawyer or get an opinion from a dental expert, and this can possibly take some time. So take this opportunity to gather all the documentation that could potentially relate to the claim, including any electronic correspondence or documents. Never alter or destroy documents. One thing I can stress is make sure that your charts and records are very, very clear, because this is your line of defense in the event of a claim. All that stands between you and the patient are your records. So make sure they're clear, accurate, detailed, up to date, and never like scratch things out or erase it or white out. If you do need to make an amendment, just make a quick little note and date it, so that it is very clear to the courts if it ever does escalate to that point. If the claim does proceed to litigation, it is taken over by the insurer's legal counsel. And just to let you know, we did recently create a micro website called Malpractice Matters, which is full of all kinds of resources all in one place. And you can visit that at cdspi.com/insurance/malpractice. Another way that we are trying to help you mitigate malpractice and prevent possible lawsuits, we have created a couple of great resources on our website and our YouTube channel, as you see here. So what happens when a patient sues you, common claims, and how to avoid them. So I do invite everybody, when you have a moment, to visit that, as there's a great wealth of information there for you. Okay, on to the second big question. What happens to your CDSPI student insurance? So many of you did sign up for this no-cost insurance as a student, and now that you're graduating, we want to share with you how you can keep this valuable coverage and how it is going to grow with you as you transition into practice. Now, as you graduate, your coverage that you applied for as a student will automatically increase. How much it increases by depends on which package of insurance you had chosen. And no matter which one you had chosen, it will continue at absolutely no cost to you until December 31st of this year. We will be mailing you confirmation of the increased coverage shortly. So if you are moving, please do update us so we have the most accurate address for you. So why should you keep this insurance and start paying for it? Well, life insurance is a personal need that is going to be unique for everybody. Whether if you have dependents, absolutely, it's very important for you. Or often this is required in order to secure financing for a loan. So if you are going to be purchasing a practice down the road and you already have life insurance in place, it will make that loan process that much easier to get your funding. But I really want to focus here on the disability insurance. Disability insurance is one of the most important insurances that a dentist can get after their malpractice. This is because as a dentist, you are not considered an employee, but rather you are considered a self-employed individual, which means that if you do become disabled, you cannot make a claim through the government EI benefit, but rather you do need to rely upon your own disability insurance. Now, if you've only done the non-medical undergraduate package, then as of your graduation date, your coverage will automatically double to this first column here: 200,000 life, 200,000 accident, and 2,000 disability. However, there is another package of insurance that some of you may have already upgraded to, called the optional graduate package. Now, this application is medically underwritten. For those of you who have not applied for the optional graduate package yet, as long as you have the undergraduate in place by your graduation date, you do have until December 31st to upgrade. Though please do not wait that long if you are interested, because what if your health changes between now and December 31st? Now, what I mean by medical underwriting is sometimes this creates a little confusion. So first of all, there are medical questions on the application. When we get your application, we will first send it to the insurer for review, pending you are under age 40. Depending on your answers to the medical questions, it's possible the application might be the extent of the underwriting, but of course, the insurer reserves the right to request a paramedical appointment, in which case we would have a nurse contact you to set that up. If you are approved for the optional graduate package, then it would replace the double up and give you with 500,000 life, 500,000 accident, and 3,500 disability. Not only do you get higher amounts of coverage, but you do also get better riders and features on the coverage. And trust me, you are going to need these higher amounts of coverage. Think about how much student debt you are graduating with, probably more than the 200,000. And then disability, I mean, even the 3,500 doesn't go very far for a dentist, but it's at least a good stepping stone to get started. And then you're maximizing the amount of coverage that you get with the discount. Because no matter which package you end up with, whether it be double up or optional, both of these packages will remain at no cost until December 31st of this year, and then get a new graduate discount starting in January. So the life and accidental death and dismemberment will be half price for 3 years starting in January. The disability will receive a lifetime 15% discount. Now, if anyone is going to be doing a postgrad or a residency, please do reach out to us, as there is an option to put the disability on hold if you will not be earning an income. Putting it on hold means you do not pay for it while it's on hold, but then when your program is done, we simply reactivate the coverage and you still have your new graduate discount. Okay, and let's just move on to that. Just as a point of reference, I do recommend that you review your insurance at least once a year, plus at every major milestone in your career. So if you have a big jump in income, if you purchase a practice, if you have a family, these are all scenarios in which you should be reviewing your coverage to make sure you still have the right amounts and the right types of insurance. So our disability plan is called Disability Guard. This was introduced in 2017 and created specifically for dentists with preferred rates and built-in features that are very important for dentists. So first of all, this is a guaranteed non-cancelable policy. What that means is that even if CDSPI went out of business, we're not, but even if, the policy is guaranteed to be taken over by the insurance company. So the only possible way that this insurance could be canceled is if you cancel it or you do not pay your invoice. So please, I bring this up because there's a lot of other brokers out there telling you the complete opposite. So if you have any questions about your CDSPI policy, you do need to speak with a CDSPI advisor, because all of our plans are specific to us, and these other outside companies do not have access to them, and often they are then relaying incorrect information to you. Another few key features of the Disability Guard: you can choose either step premiums that start low and increase with age, or level premiums. They start a little higher, but they do not increase until age 65. So you're locking in that rate. Our coverage can be maintained until age 75, which is rather a long period of time. I'm sorry. Own occupation, HIV, and hepatitis coverage, they are all automatically included in the plan at no extra charge, where generally in the private market, these features may be available, but you will need to add and pay for them. Some of the riders that are additional in the plans: so the cost of living adjustment, this comes with either the double up or the optional plan, but the future insurance guarantee rider, this one is only available in the optional graduate package. Now, one thing I do like to point out, so I've been doing this for 19 years now, And there is a feature in our plan that I have not seen anywhere else before, but really makes the claims process a lot easier for you. And I feel it's important to point out. So there is no coordination of benefits clause in our plan. That means if you become disabled, as long as it's a total disability, so no part-time working, then upon medical evidence of the claim, you simply get the amount of your coverage. We're not asking you for proof of income. We're not taking into consideration any other policies you might have. And like I said, I've never seen this in a disability policy before. Normally, you do have to provide proof of income, and the insurance company usually will take into consideration any other policies that you do have. So this is an important feature to just make the claims process easier. Now, if you think that you're never going to become disabled, we all think we're young, healthy, and invincible, but we've actually been able to, through our claims and our stats, establish that 1 in 4 dentists will suffer a disability that is 2 years or longer. So that's some pretty high numbers. So do you want to run the risk that you're not that 1 in 4? So disability, I cannot stress how important it is. And please do keep it up to date as your income increases. Now, when you graduate, your CDSPI insurance continues with you, and there are some ability to customize it if you want. So what I did here is I'm comparing both our double up and our optional plan to another common plan that's out there. Now, if you only did the non-medical, then as of your graduation date, you're going to have $2,000 a month in disability coverage with a 90-day elimination period. Own occupation and cost of living adjustment will be included in your plan. However, if you did the optional graduate, then you get $3,500. You have a 30-day elimination period instead of 90. However, if you are financially comfortable with a longer elimination than 30 days, absolutely, you can switch that to a longer elimination period, and it will lower the costs. Again, own occupation, cost of living, future insurance, all included. In contrast to common outside policies that you are sold, often it's still $3,500. But most other brokers, when they are approaching you, they default to giving you a 90-day elimination period. And you have to ask yourself, when you're just starting out in your career, if you became disabled, can you get by for 90 days on your own with no insurance? Or would you rather have a shorter elimination period? As I said earlier, own occupation is available out in the private market, but is something you need to add and pay for. Normally, the default definition is regular occupation. So there are some similarities in the plans, but there are also some differences. So that coordination of benefits is a big one. The fact that ours has a 30-day waiting period, so your benefit starts to pay out that much earlier. And then obviously it comes down to premiums. Now, if you are comparing policies, please make sure you are comparing apples to apples. You cannot just look at the premium because, like I said, most outside companies are targeting you with a 90-day waiting period, and ours under the optional package is 30 days. Certainly, a policy that only has a 30-day waiting period is going to cost more than one that has a 90-day. So for apples to apples comparison, what I did is I took our $3,500 that comes with the optional graduate package, and I switched it from a 30-day waiting period to a 90-day. And this is the example of a 28-year-old non-smoker, male and female. And you can see when I do, in fact, switch it from 90 to 30, our premium comes out lower. So please, if any questions, if you do have another policy out there and you want a second opinion, feel free to reach out to us. As I mentioned earlier, we're all on salary, so we have no motives in giving you any bad advice if we feel that your other policy is good for you. And also keep in mind that you can have disability with more than one company. And since you're just starting out now, your income is going to increase, and very quickly you are going to have income to likely justify both policies if you do have both. So just something to consider. Next, I want to move on to office insurance. Now, I assume most of you are likely going to start out as an associate. And often there is a misconception with associates that they think that because they don't own the practice, that they do not need office insurance or they don't face any risk. And that is actually not true at all. Because, like I said earlier, with the disability, you are a self-employed individual. So you are not going to be an employee of the practice the same way the receptionist or the hygienist is. So if something happens to the practice that you are associating in, maybe there's a fire, flood, vandalism, something like that, and it has to close for repairs, the practice owner's policy is not going to cover your missing income during that closure. The only way that will happen is if you have your own office insurance. Now, our office insurance plan is called Triple Guard. And what we do is that we have a version for practice owners and we have a version for associates. And under the associate plan, if you are associating in multiple clinics, which we know is common, you can list multiple addresses on the same policy at no extra charge. The associate plan, as long as you activate it before December 31st of this year, so once you secure a job, that's when you activate the coverage because we need to know the address that you are working at. The associate plan will give you $50,000 of content for anything that you do own within the practice. Maybe you have a few hand tools or instruments or something like that. It is going to give you a $5 million of commercial general liability. So for lawsuits that do not result from treatment of a patient, maybe a slip and fall or something like that. But most importantly, it's going to give you practice interruption coverage. And that's exactly what that example I said earlier was. If there is a fire, flood, vandalism, and it closes for repairs, the practice interruption would cover your missing income during that closure. Now, as long as you activate your Triple Guard insurance before December 31st of this year, it will also be at no cost until December 31st of this year, and then half price for the next 3 years. Now, once you factor in that 50% discount, that brings the cost to $356 a year. Basically about $30 a month. Now, what I ask my clients all the time is sit there for a moment and ask yourself, how long will it take you to lose $356 in income? Probably not very long, maybe a day or two. So even if something happens to the practice a day or two in the year, it more than justifies the premium, let alone if something more catastrophic were to happen and there is a prolonged closure. Now, I know sometimes we think, just like we think we're invincible and won't become disabled, we also think nothing's ever going to happen to the practice. So I want to share with you some examples of claims that we have had in the past. So we once had a mall's sprinkler system malfunction and it left the office under a foot of water. We had a dental practice that experienced a mid-afternoon fire that engulfed the entire building. Or maybe you remember some of the more catastrophic events in the news in past years. So things like the floods in Calgary in 2013, the ice storms in Ontario in 1998, and in New Brunswick in 2017, or the train derailment and fire in Lac Mégantic in 2013, or more recently, the Fort Mac fires or the BC wildfires. These natural disasters are becoming more and more prevalent, and dentists are needing to rely upon their insurance. Because if you were an associate in one of these practices, what would you do if it had to close for repairs? What's the backup plan? How long can you get by with no income? The solution is to get your Triple Guard insurance to give yourself that peace of mind in knowing that your income is protected. And with the significant discount you get, I think it's a win-win situation that everybody should be signing up for that. And like I said, you can insure multiple locations at no extra charge. So as soon as you do secure a job, please reach out to us so that we can help you get that set up. Now, I know I went through some of the questions today that new graduates are having, but everybody's situation is different, and you may have a very different question that's specific to your situation. So please take advantage of arranging a meeting with either myself or one of my colleagues to help you go over your options. Because keep in mind, if there's one thing you should know about CDSPI, it's that we are very different from other financial services providers. Our mission, structure, and not-for-profit status truly does set us apart. You can visit on our website at cdspi.com/transition to practice for other resources and information as you move into this next stage of your life. But for now, I'm going to pass you over to Matt, and he can address some of the common questions that he gets.
I'm on the financial planning side of things, and I want to take you through a couple common themes and questions we get from new grads and early dentists. So yeah, I just want to take a couple minutes and take you through some of these slides. So next slide, please. Now, one of the biggest questions we do get is revolving around debt. You know, debt can be quite stressful when you graduate. You know, go back one slide, please. We've taken a scenario here with a student with $250,000 worth of debt. Now, you know, this could be plus or minus what you have. On average, this is kind of what we see. And we're working with a 6% interest rate. Now, typically the loans are prime minus a quarter. So it is a touch higher than that now, but you know, we're moving to a declining interest rate over the next couple of years, so it is going to fluctuate a bit. But at 6%, you can see that a $250,000 loan is about $4,800 per month if you want to pay it off in 5 years. If you want to stretch it to, you know, say 10 years, for example, you're going to be paying about $2,800 per month. So what I would suggest is, you know, we work with a lot of students to find what the right balance is and what your comfort level is with debt. You know, the overall loan balance is going to be different for everybody, and your budget's going to be different. So take advantage of our services, and we'll work with you to find the best balance so that you can pay this off in the right amount of time. Next slide, please. So whatever that number might be, you may have seen this tactic in your studies, but make it a SMART goal. It's an acronym that stands for specific, which is paying off that loan at $250,000. Make it measurable, and by doing that, you know, your balance is 0 by the end of it. Achievable is your payment of whether it's the $4,800 or $2,700 per month. You know, can you make that happen? And that kind of leads to realistic, which kind of relies on what your budget is and what your salary is. So, for example, if you're earning $175,000 a year, you know, you have about $9,300 per month for expenses. What could you realistically afford to put towards your loan? And then finally, timely, which is to pay it off in 5 years, for example. So we've touched on debt. Debt is not the only thing to factor in. You want to consider investing as well. You want to participate in the market while paying off your debt. And again, that we can help with finding what that balance is. And this slide here just kind of puts it into perspective. So here we have Owen and Gabriella. Owen is the bluish line. He's investing $2,000 per month for 20 years from age 45 to 65. He ends up with a balance of $911,000. Gabriella, on the other hand, she still invests $2,000 a month, but it's from age 35 to 55. So still 20 years each, but you can see that her balance is over $1.6 million. So the key here is they've both put in $480,000, the same dollar amount, but Gabriella is so far ahead because she had a 10-year head start. So that just reinforces the point that, compound interest is a powerful thing. That 10-year head start makes a massive difference. And that goes a long way in retirement, right? It's, she's $700,000 higher than what Owen has. And they've put in the same amount of dollars. The next slide, please. Julie touched on this earlier on. We have our own platform of 43 different segregated funds, and recently we were the top performing seg funds company out there compared to our peers, which was amazing to hear. This is it's a very good accomplishment for us. So 88% of our funds are within the first and second quartile, according to this Morningstar article. So again, it's a huge achievement. A lot of it comes down to, we have lower fees compared to our peers. We have good performing funds. There are some other good features to our products. The fact that we're segregated funds, there's creditor protection as well, which is huge for self-employed individuals. And we have world-class managers that help us out providing these funds as well. So, don't hesitate to reach out. We can create some sample portfolios for you and find a good solution for you going forward. So another big question we get is, should I incorporate? And if you can go to the next slide. Now, incorporating is creating a separate legal entity and having that own your corporation, and then you're the shareholder. It's a great tool to build wealth because you benefit from the tax deferral in the corporation, the lower tax rate. So at some point in your early career, you're probably going to have this conversation either with your advisor, your accountant, your lawyer. It's not for everybody, but at least have the conversation. Here are a couple questions to kind of do a self-assessment. Again, everybody's different. So yeah, just take that time and have that conversation. I can help you out as well, or my colleagues on the investment side of things. Two kind of things you kind of look for before you start to consider it is having a surplus. You're not spending everything you're making because, again, you benefit from keeping money in the corporation. And then secondly, you kind of want to focus on your debt first to get that down before considering incorporating. But again, have that conversation with the people close to you, and we'll give you some good guidance going forward. Next slide, please. So next steps. CDSPI is here for you, both on the insurance and investment side of things. If anything stood out in this presentation and you want to learn more about it, if we missed something, again, don't hesitate to reach out to Julie, myself, or anybody at CDSPI. We're here to help you. You can use that QR code on the screen to book a meeting directly, and we'll be more than happy to help you. Next slide. So CDSPI is, call it a one-stop shop. We provide, insurance and investments, what we've gone over today, as well as financial planning. And the things that we don't offer, we've reached out to our strategic partners, such as Scotiabank. They provide some discounted services for us, as well as our partners at M&T. They offer some great perks on the accounting side as well. So again, if you want to take advantage of any of this, you can book a meeting with us, and we can pass along their contact info. There's some links on our website as well, but yeah, I guess your first point is reach out to one of us, and we'll point you in the right direction. Now, this website is a great resource. So as new grads and entering the dental field, have a look at this. It's a collaboration between us, the CDA, and your provincial dental associations. Has some great resources on there in terms of, employment, as well as some other great stuff. So have a look at dentalcareeroptions.ca, because again, it's a great resource for you guys. There's a QR code on the bottom right-hand corner. So yeah, feel free to click on that and start browsing. That leads us to our Q&A. I just want to mention as well, there's a 1-minute survey that goes a long way. So please, another QR code for you. You know, that feedback actually really helps us. Or if there's certain themes or other things you want us to speak about in these next presentations, that really helps us out to build these presentations because they are for you. We want to give you great content. These are some of the common questions that we've gotten in the past, but you know, we can kind of build presentations, you know, based on what your needs are too. So if you've liked what you've heard today, you know, let us know. If there's some other topics, again, let us know, but that feedback goes a long way.
And I guess we'll open up the
speaking of that,
floor
there was,
at this moment to see if there are any questions. Anyone's
there was
brave
one
enough to
question in the
speak
chat
up?
box, Julie. Yeah,
Okay.
Julie, there was in the chat box.
Oh.
They didn't sign up for the coverage as a student, but what's the best way to go on about coverage now?
Okay, so if you haven't graduated yet, you still have time. The deadline to sign up for the undergraduate plan is your graduation date. You can apply online through our website. There's an online fillable form. If your graduation date has already passed, because I know we're starting to get into that season, then you're going to apply as a regular dentist as opposed to a student. You're still eligible for the same insurances. The only difference if your graduation date has already passed is that unfortunately the discount isn't valid, but you are still absolutely eligible to apply to all the same insurances. So please get going and get that quickly because I know those graduation dates are all just right around the corner. Matt, it looks like there's a question for you.
Yeah, so that's a great question. Being that we're an insurance company, we offer segregated funds. Same concept as a mutual fund. It's just the fact that we're an insurance company. It's labeled as a seg fund. So, you know, moreover, a lot of other companies out there, they have certain other features to seg funds, like certain guarantees. Those are stripped out. So yeah, I guess to allow us to provide the lowest cost possible, some of those other features are stripped out, but it acts the same way as a mutual fund. It's you know, a basket of, say, stocks, for example, or a basket of bonds. But just because we're an insurance company, we offer segregated funds is kind of the quick answer to that.
Do we have any other questions from anyone else? Oh, there we go. So for malpractice insurance, which deductible and coverage amount? Okay, so with outside of Ontario, Quebec, and Alberta, you can choose between 3, 4, 5, 10, and 25 million. I find that most new grads fall within the $3 to $5 million range. Truthfully, I think it's only about $130 difference a year between 3 and 5 million, just off the top of my head. With regards to the deductible, we offer 1,000, 2,500, and 5,000. I always recommend the 1,000 deductible. The reason being is that if there is a claim approved against you and you have a 5,000 deductible versus 1,000, that's an extra 4,000 out of your pocket. Yes, if you have a higher deductible, you save a little bit of money, but again, it's about $120 a year savings. So in my opinion, that savings is negligible versus how much more would be due out of your pocket with the higher deductible. But of course, entirely up to you. I see there's a second question there about, do you sign up for malpractice before your license? So as I was going through earlier in the presentation, your malpractice and your license go hand in hand. You can't have malpractice without a license, and you can't have a license without malpractice. So do apply for both at the same time. If the licensing body is asking you for malpractice, just let them know that you have applied with CDSPI. I mean, they're very familiar with the process. We do this every day. So make arrangements for your license. At the same time, also fill in the malpractice application. When we get it, we will contact the licensing body to let them know we have received it from you and to ask what date they are going to activate your license so that we activate the insurance as of the same day they activate your license. There's another question here. Does insurance cover with maternity leave? So if you have a standard maternity leave, everything's healthy, everything like that, unfortunately, disability insurance is not going to cover that. Being pregnant or on maternity leave is not a disability. And so unfortunately, you can't put in a claim for that. If you are having a high risk pregnancy or you're on bed rest or something like that, and you are being ordered medically not to work during the pregnancy, then yes, you could put in a claim for that. But one thing I will bring up, I alluded to it earlier with the disability about putting it on hold. So if you do residency, post-grad, sabbatical, maternity leave, you can put it on hold during that time, minimum 6 months, and on our mat leave, maximum 3 years. When it is on hold, you do not pay for the premiums, but you also need to understand you don't have access to the coverage should something happen. But for example, if you're on maternity leave and you do become disabled, you're not going to be in any different financial situation than you were prior to the disability. But then when your maternity leave or your post-grad or residency or whatever the reason is done, we simply reactivate the coverage. You don't need to apply. You don't need to do any medical testing or proof of income or anything like that. And your new grad discount will still be applicable. So please, if that's a situation for you, you're doing some sort of post-grad program, you are on mat leave, give me a call and we can discuss it more specifically to your situation. So I guess we'll just open that up to any more questions.
And again, Julie kind of just mentioned it. If you have more specific questions, yeah, don't hesitate to reach out, and either one of us will take care of it.
And I do believe everybody who registered for this seminar, I believe you are going to receive a recorded version of it. So if you want to go back through again and re-listen to some of the questions, if you missed some of the information, please feel free to do so. Both Matt's and my contact information is on the screen there. So please feel free to reach out with any questions. We've both been doing this a long time. No such thing as a silly question. If you're thinking about it, somebody else probably is too. And if that's it, I just want to say thank you very much on behalf of Matt, myself, and the rest of CDSPI for joining us. Congratulations as you move forward into this new chapter. And we hope you continue to work with us, as your relationship with us does not end with graduation, but is in fact just starting as you branch out onto this new adventure. So congratulations. Thank you very much for everybody, and enjoy the rest of your evening.
Bye, everyone.
Bye.